Assalamualaikum, my name is Muhammad Irfan bin Izumrad. Today I will present about interest rate impact on household and firm, especially in Malaysia. Before discussing the specific issues, it is important to understand what interest rates are and why they matter to the Malaysian economy. Interest rates represent the cost of borrowing money over a specific period. They influence consumer spending, business investment, and overall economic growth in Malaysia. Interest rate movement have a particularly strong impact because of approximately 80% of household debt and 75% of commercial loans are based on floating rates. In 2022, BNM introduced the Standard Base Rate or SBR framework. Under this framework, any increase in the override policy rate known as the OPR is transmitted almost immediately to floating rate loan. As a result, households and business feels the effect of monetary policy change very quickly. One major group affected by rising interest rate is a Malaysian household. During the COVID-19 pandemic, mortgage rate fell to a historical low of around 1.75%. This encouraged many Malaysians to purchase home because financing costs were affordable. However, when interest rate increased after the pandemic, households with a floating rate financing experienced significant increases in their monthly repayment. Many Malaysian families have limited saving reserve. Therefore, higher housing costs combined with the increasing prices of groceries and daily expenses create substantial financial pressure. To cope with these challenges, households often reduce spending such as dining out, entertainment, and non-essential purchases. Islamic banking offers several Sharia-compliant solutions to help households manage interest rate risk. The first solution is fixed-rate murabahah or tawarruk financing. Under this arrangement, the bank sells the property to the customer at a cost plus profit price. With fixed repayment amounts, this protects customers from future OPR increase. Another option musyarakah mutanakisah or diminishing partnership financing. This contract can provide more predictable payment structure while remaining fully Sharia compliant. In addition, Islamic banks such as Bank Islam and MyBank offer RNR or restructuring or risk holding program. This program allow customers facing financial difficulty to extend their financing tenure, reducing monthly payment and improving cash flow management. Next, we go to firm problem. Businesses are also significantly affected by rising interest rate. Approximately 75% of commercial financing in Malaysia use floating rates. Therefore, when interest rate increase, business immediately face higher financing costs. Small and medium-sized enterprise or SME are particularly vulnerable because they often have limited cash reserve. At the same time, households reduce spending due to higher financing commitment, which lowers consumer demand. This combination of higher borrowing costs and weaker sales revenues create financial pressure on firms. As a result, many companies delay expansion projects, postpone equipment purchase, and implement hiring freeze to control costs. The solution for this matter is Islamic finance provide an effective solution through yearly repayment and the concept of IBRA, which means rebate. During period of rising interest rate, business can reduce future financing costs by settling their variable rate Islamic financing earlier. According to BNM guidelines, when a customer settles murabahah or tawarruk financing before maturity, the Islamic financial institution must provide an IBRA or rebate. This means the bank waive unearned profit charge, reducing the final settlement amount. As a result, business can preserve cash reserve, lower financial obligation, and strengthen their balance sheet. Many Islamic banks include MyBank Islamic and Effing Islamic provide this financing. This assignment helped me connect theoretical concept with real-world financial situation. I learned how change in the OPR and SBR framework directly affect household and business in Malaysia. In conclusion, Malaysia is highly sensitive to interest rate change because of its heavy reliance on floating rate financing. Higher interest rates increase repayment burden for household and financing costs for business, which can slow economic growth. However, Islamic banking provides practical and Sharia compliant solutions. Thank you for your attention. That's all from me.